Hi, Howard Friend HF Systems here. Bit of a rundown. It's been a few days since I did my last one, so just catching up after the recent decline and rebound in a lot of these risk markets. So first up, euro dollar. So what we're doing is we've broken down quite sharply to a swing low of 103.591. Saw a rebound from there to 106.015 a couple of days back. That stalled just ahead of broken support at 106.273 and also the falling 20 and 50-day moving averages. So to me, it looks like the balance of power is still in favor of the bears. So looking for the loss of inside day support, which comes in at 104.443 to trigger another crack at the swing low 103.591 initially. On the upside, if we can get back above 106.015, then that would suggest to me that we've seen a much more sustainable rally underway, and then we are back up to retest the ceiling at 107.741, 107.87. Onto cable. Cable, very similar kind of idea there. We saw quite a rapid breakdown through support at 124.298 to a new swing low of 119.336. From there, a powerful two-day advance to 124.065. So that stalled just below broken support, 124.298. And also we've got the 20-day and the 50-day moving averages both trending lower. So it looks to me like the balance of power is in favor of the bears. So in terms of trigger levels, looking for the loss of the inside day support at 121.726 to trigger another crack at the swing low 119.336. On the upside, if we can get back above that 124.065, then that for me would suggest that we are seeing a much more powerful recovery. And then that brings back into play 125.995, 126.669. On to dollar yen. So dollar yen, I was looking for a bit of a correction because it was getting quite overextended. So it topped out 135.576 and we saw a big two-day pullback, but that has found support at 131.489 ahead of the rising 20 and 50-day moving averages, and the buyers have come back in. So we've got a reaction low within the major uptrend at 131.489. So for me, the balance of power is still in favor of the buyers, the bulls, looking for breach of 135.576 to signal an extension of this this major bull trend into the 138 handle. Meantime, should we fall back through the 131.489 reaction low, then that for me would suggest that we've seen a quite an important top, and then we're looking at a pullback into psychological 130. We've got the rising 50-day moving average comes in a bit below that. And maybe we've got support 126.362. We could see an overshoot back down towards there. But for the time being, retaining a bullish bias. Moving across to gold. So gold seen some pretty choppy action of late, push up to 1878.91, big outside day, followed that to the downside, and then we based out at 1805.13 and have since seen again a powerful two-day advance up to 1857.56. So we've stalled, we've seen an inside day as with the other first couple of markets, euro dollar cable, and now it looks like we've seen the formation of a lower high, a reaction high within the downtrend, looking for loss of 1833.68 to signal another crack at the swing low, 1805.13, below which we could see this thing head down below 1800. Buyers, bulls need to get this thing back above 1857.56 to suggest that we're seeing a much more sustainable move, and that brings 1878.91 back into play, and then the 100-day moving average, which is kind of rising but we're below it, comes in today at 1890.31. Moving on to crude. Crude has broken down quite sharply, seen quite a meaningful switch from buying to selling, from bull to bear. The break of 110.07, this reaction low within the previous advance, has seen a potentially major high at 121.52, a big outside session on Friday. So bears to me look like the bears are really in control of this market. Bounces look limited to 110.07 on the upside. Maybe at a push, maybe we could see 114. But as long as we're below 116.30, looking for this thing to head lower. Sub 100, 93.741 is a major level to the downside. So let's see what we can do on the way down. The buyers need to see this thing back above 116.30 to suggest that we've seen a major reaction low within the larger bull trend, and then we're heading back towards the swing high at 121.52. Onto S&P. So S&P, we were in this kind of tight band, which at the time I was kind of bullish, looking for this thing to break higher, but we didn't get the upside break. We didn't get the signal. Instead, we got the break of the lower end of the band, which I said at the time, should it happen, we're looking at new swing lows, and that's exactly what we've seen. So we saw that aggressive sell-off on the break of support, 407.440, bit of a bounce to 38.41.85, and then another push to new lows. So where we are right now, right here, right now, we're seeing a bit of a recovery. I think that this is just a minor recovery before we see another selling wave. So looking for this thing to top out 3,700 to 38.4185, this kind of region, before we see another push to the downside, maybe 3,500. The buyers really need to see this thing back above that 38.4185 to suggest that we've seen a major low traded down here. Should that occur, then we're looking at another push to the upside, and we've got the falling 20 and 50-day moving averages, which really contained the last push higher. Lastly, but not leastly, onto to Bitcoin. Big break lower, gap lower here. So we've got this gap resistance, big down session, down, down, down. Bit of a bounce to 22,954, and we've since seen a little push below 20,000, psychological 20,000, but there seems to be a little bit of support coming in. So be interesting to see whether the buyers can have a crack at this one. But really, as long as we're below this 22,954, it looks to me like the bears really are in control, at least over the short-term action, and that we're headed down towards 18,000. Should we get back above 22,954, then that would suggest we've seen a good swing low in place. And then we're talking about a deeper rebound, a stronger rebound towards the old swing low, which comes in at 25,330. Thanks very much for watching, and back again tomorrow. Cheers.